Jason, Happy New Year.
Happy New Year to you and everybody.
We survived 2024. That was a pretty good year last year.
Yeah, on the stock market, it was quite the year. It was a great year.
I could take those all the time.
Yeah.
You know, it's amazing how people feel when they get their statements in and they've made some money.
Yeah. Great year.
The economy's been pretty strong here in Canada. We haven't seen a recession. We're seeing interest rates come down. It's a good time in the financial world. Yeah. But on today's show, Jason, let's talk about the granddaddy of them all is the S&P 500. We're going to do a bit of a show on the forecast of 2025, and it's a crazy time of the year, right? I mean, you've had a really good year in 2024, a really good year in 2023. So we've had two back-to-back years, phenomenal performance. But each December, what happens is you start to hear Wall Street, all the analysts come out, all the experts come out, the best and the brightest come out, and they start talking about their market forecast for the upcoming year. And this year, investors are paying really close attention because the S&P 500, again, has delivered its second great year in the market. 20% returns have been kind of the norm. It's an amazing gain, and historically, the benchmark's average returns are around 11.4%, Jason, on the S&P 500, which is the U.S. Big 500. But where are things going to be this year? So traditionally, equity markets perform well when the Federal Reserve starts to cut interest rates, as they're doing right now. They're trying to, they're trying to find a way to cut rates when, in fact, the economy in the U.S. is strong. But they don't want to, again, create more inflation, which we've been fighting for the past year or two. But given the bank's recent rate cuts and the growth of the U.S. economy, it appears to be difficult for the environment for markets moving forward.
Yeah, what's happening is, like you said, it's a paradox. On the one hand, they want to they need to cut interest rates, but on the other hand, the market's still hot. And if you lower the interest rates and the market keeps heating up, then they've got to find that real balancing act.
Well, right now they're saying that the S&P valuation is a little bit stretched out right now. Jobs are getting a little harder to come by, and again, returns typically, the year of a new presidential election are a little bit off as well. But we've got some I guess prognostication here from some analysts out of the U.S. and I'm curious what they're saying, Jason.
Yeah, we took a look at some of the we found about 7 analysts that we kind of follow, and most are predicting an average rate of return between 9 and 15% for 2025. So right now the S&P is right around 6,000. A lot of them are coming in at that 6,500 for the S&P. Some are pushing 7,000. So, it's nice to see not all the analysts, but most of the analysts are still saying that we're in for another reasonably solid year. Maybe not like the 20% that we've seen in the past couple of years, but we'll take if they're right, we'll take a 9 to 15% rate of return.
You know what, 9 to 15, who wouldn't take that every year?
Take that all day.
I was on a podcast, watching a podcast a few months ago, and they had some Wall Street global strategists, economists on, and they were running all their predictions, and they predicted that the earnings of the S&P 500 over the next 2 years were going to go up by about 30%. And stocks typically follow earnings. So when you have that bullish sentiment coming out that stocks could go up 30%, earnings could go up 30%, stocks could easily follow that. But there are a number of reasons to be optimistic moving forward into 2025. Number one is the Federal Reserve Bank is cutting interest rates now. We don't know if they're going to cut 1, 2, 3, 4 times. Now, the Bank of Canada is cutting rates here in this country, and but the U.S. isn't as fast to jump on board to cut rates. Number two reason to be optimistic is inflation has come down. Now, again, they keep telling us here in Canada that inflation's under control. It doesn't feel that way these days, right, with the price of food and the price of things. But inflation has come down. Number three, you've got job growth and consumer spending remain positive. So the Americans, and they just keep, they keep buying stuff, right? They keep buying stuff, right? That
Yeah.
economy is solid. Number 4 is they're going to have less regulation. This is a big deal. They're going to have less business regulation under President Trump moving forward, which, again, less regulation is in most cases better for the market, obviously. Number 5, of one of the reasons to be optimistic is taxes are likely to remain low. Trump's talking about possibly lowering some income tax on corporations. If corporations have a lower income tax, they typically make higher profit. Number 6, corporate profits are currently forecast to grow by double digits in the next 2 years. And number 7, or the 7th reason to be optimistic for 25 is you've got advances in AI technology, which could boost productivity and growth over time, Jason. And last quick point here. So again, looking at the profit picture for 2025, there's some research done by a company called CFRA Research, and they're looking at gains in that 13% range. So it kind of falls into the 9 to 15% range that we've heard from other analysts.
Yeah, well, it feels like there's lots of headwinds, and it looks good for
tailwinds.
Tailwinds, excuse me.
Yes,
yes, tailwinds.
We like tailwinds.
Yeah, tailwinds for the market, and it's interesting. We talked about 2 years of 20% gains, and one of the things you have to keep in mind is the length. Another reason why we think it may continue to grow is the length of bull markets. So usually bull markets last about 50 months, 4 years, and the average gain on a bull market is about 152%. But currently we're sitting here just finishing year 2 in this bull market, and the gains have been great, but really only about 65% over the last couple of years. So, technically we are in early stages of the bull market. So again, some people are getting a little squirmish about it, but we are, we do think, and analysts think, that we're in early stages of this bull market.
And the other key thing too, I think, is if you think about it from a practical point of view, is we've seen a lot of people in the last 12 months, GICs were really big. Yeah. Everybody and their brother wanted to buy GICs back in 2022 when you could get 5% for a year, 5% for 2 or 3 years. Those are all coming due, and they're coming due in the 3s. So no longer is anyone rushing out to buy a 3% GIC, especially when you pay tax on part of the growth, depending on how you've got it invested. The other big thing I've seen too is that there's been a lot of money from parents to children. That money, you've seen real estate get sold. Mom and dad have sold the home. They're buying a townhouse. They're downsizing, giving kids some money. That money's finding a new home. And again, younger investors are more bullish on the stock market. You've got a massive inheritance transfer happening. So there's a lot of other factors that are driving this stock market. Now, there are some possible headwinds facing the S&P 500 in 2025. Valuation levels are high. So typically in the S&P 500, your valuations are in the 16 to 20% range. The price earnings multiples, they're right now around 22, 23. Higher tariffs could trigger a rise in inflation. So, or possibly even a global war. So I don't know what Trump's going to do with these tariffs he's been talking about. He's been threatening Canada and the world, but higher tariffs I don't think is good for the economy. There's a decline in immigration, which could lead to higher wages. Again, U.S. is trying to push out some of the illegal aliens. I get it 100%. There's been some pushback on Canada. We need to kind of get our borders in line as well. That could put a rise into wages. There's actually some geopolitical events overseas. Hopefully, we'll get some things figured out in the Middle East and over in Ukraine. And lastly, U.S. debt could spook the markets, if rates go even higher. So hopefully the American consumer is, again, living within their means. But, honestly, at the end of the day, the outlook for 2025 appears relatively positive, supported by double-digit growth in earnings per shares, reduced regulation, lower taxes, a continual decline in inflation, and along with interest rates. So I think it looks like we're going to be in a pretty good position. I mean, I hope we're sitting here a year from now and, those returns are on the higher side of 15 as opposed to the lower side. But But anything, 7, 8, 9, 10, 12% is a fantastic year in the markets.
Yeah, absolutely. And I think some of the headwinds that you talked about are headwinds that you will always see, like the geopolitical. That's never going to go away. We always see every year there's always some hot spots in the world that kind of cause a bit of chaos. But in the end, like you said, it feels like there's more positives than negatives for the market.
Yeah, exactly. And last quick point here. We did look up some Canadian market pickers and what they thought. And one of the guys I love to follow is Brian Belsky over at BMO. And he made a comment in his post is he's expecting the Canadian stock market to earn about 15% in 2025. He thinks financials are strong, REITs, real estate investment trusts are strong. He's a little cautionary on telecom, healthcare, and consumer staples. So if we get a U.S. market that does 9 to 15, we get a Canadian market that does 9 to 15. Brian Belsky's saying 15. He's always very bullish on this stuff, but I'd be happy to take 10 to 12. It would be a good year for investors. And
so what's your prediction? What do you think? We're sitting here in December. We're doing the podcast for January, and I think we're going to have a good year.
Yeah, I think pigs get fat, hogs get slaughtered. Yeah. So 9 to 15, I would take the middle. I would go in the median at 12.5%.
I'll take it,
and take the over under. It's all good.
I'll take the over.
It's all good.
I love it.
Have a happy New Year, Jason Pollock. All the best in 2025, and thanks to our listeners and our viewers. Have a happy 2025. Don't forget, you can get us on the YouTube network. You can get us on Spotify and Apple.